The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. I hope you're having a great Thursday. Welcome to another edition of Breakout Investing on TFNN. If you want to give me a call, feel free to do so. 877-927-6648. Toll free as always. You can catch my show daily on TFNN from 3 to 4 Eastern, just ahead of the Tom O'Brien show from 4 to 6. If you can't listen to the show live, no worries. You can always head over to iTunes, pick it up as a podcast, and don't forget you can listen to all TFNN programming on your smartphone. A lot of people like to do it that way. Just open your smartphone browser, type in tfnn.mobi, and you can listen to the stream that way as well. And don't forget about Tiger TV. That is available on the homepage of tfnn.com. If you're home working on your PC, Channel 1, the show is carried live. It is archived in Channel 13. And Tiger TV is also viewable on your handheld device as well. Just have to open your smartphone browser again, type in tfnn.com. Go over to the top right-hand side of the homepage. You'll see a box there with 3 cell phones in there. Just click on it, and soon, very soon, Tiger TV will start streaming right on your phone. So Tiger TV, you get the show audio. You also get to see the charts that I'm looking at on the show as well. All right, well, we had some follow-through for the NASDAQ earlier this week on Tuesday. A little bit of a stalling day yesterday for the S&P 500. We had volume rise from Tuesday's levels. S&P couldn't make much progress, so not great price action in that index alone, but so far so good when it comes to this renewed rally. Big breakouts for the major averages on Tuesday. Market tide flowing positive again. That means it's okay to put money to work for the Ultimate Growth Stocks model portfolio. We added a new name today, a fast-growing oil and gas producer based in Texas. If you want to see what the current model portfolio looks like, you can check out 30 days free of Ultimate Growth Stocks right on the homepage of TFNN.com. Just go to the newsletters tab on the homepage, then click on investment newsletters and check out 30 days free. All right, checking in on the markets here. Let's take a look at the NASDAQ composite. It is up close to 9 points today, 0.3% gain to 3231. Moving on to the S&P 500. Same situation, S&P 500 trading in a very tight range today. Hits a high of 1546 and a low of 1541. So just a 5-point intraday range here. That's pretty good to see, actually. Right now, the S&P 500 up a little more than 3 points to 1545. So trading right near its session high. And finally, the Dow Jones Industrial Average working on 5 straight gains here. Dow right now up about 36.5 points to 14,333. Volume today on the NASDAQ tracking about 5% lighter than what we saw on Wednesday, which was pretty much average at 1.72 billion shares. Volume on the New York Stock Exchange tracking lower as well, but not by much, almost tracking pretty close to what we saw yesterday, which was 681 million shares. Headlines earlier today, the European Central Bank left its key lending rate unchanged at 0.75%. No big surprise there, although there have been rumblings in the Eurozone that lower interest rates may come sooner rather than later. That has what has been fueling recent weakness in the euro and strength in the dollar. Speaking of the greenback, let's check in, see the dollar under quite a bit of pressure today. Where is it here? We'll see. Yesterday, the U.S. dollar, big day. It was up about 0.4% to 82.51. So big day for the dollar yesterday. Today, it is under pressure, down 0.5%, giving back all of yesterday's gains and then some. Last trading around 82.07. Let's check in on the. I wanted just to check in on the. Let's see here. Pull up a saved chart I have for the U.S. dollar index, and I just want to show you how it's been doing since it broke out on February 20th. Let's see here. Always so hard to find charts in here. There it is, U.S. dollar index. You see the breakout February 20th for the U.S. dollar index. Interestingly, it's only up about 1.8%. from that breakout February 20th, but definitely in an uptrend here, and just sort of moving inversely to the euro. When the euro is weak, the dollar tends to be strong, and vice versa. So U.S. dollar index under quite a bit of pressure today. Let's check in on shares of Facebook. There was news today around Facebook. They announced or unveiled a new look to its popular news feed. That's when you first go to, if you have a Facebook account, you just, log in. You're right on the newsfeed page. You just see what your friends are posting. Mark Zuckerberg said he really wants to see the newsfeed look more like a digital newspaper, so users are going to get more visual elements, and they're also users will have more control over what they see. So Facebook has been in rally mode over the past 5-6 trading sessions, up another 3.9% today to 28.52. Still trading underneath that 50-day moving average. Could be resistance for now. You can see the 50-day moving average for Facebook was resistance back in mid-February, February 18th, February 19th, in that area right here, and kind of bumping up against resistance here today. But when you look at a weekly chart for Facebook, this is a good one to have on the watch list, because if this market rally gains traction, and if the recent breakouts in the major averages are to be believed, and there's more money set to come in from the sidelines, we want to keep an eye on Facebook here, because if it does get above that 50-day moving average, and on a weekly chart you can see the 10-week moving average here, if it gets back above that, you could see an eventual breakout try over its recent high of 32.51. So possible that Facebook's technical health could continue to improve. Just a perfect example of a watch list stock. Not ready yet, but it could be soon. Take a look at Boeing. The Feds today came out with kind of an initial study about the lithium-ion battery problems that the Dreamliner jets are having, and they really don't know what is going on yet. They don't know what caused the fire, but that hasn't stopped shares of Boeing from rallying another 2.5% today to 81.09. 81.09. So Boeing acting very well. Recent breakout over 77.54. 77.54, that would be its high set here. I think that was in early February. That was February 7th was the intraday high, 77.54. So a little bit extended up here, but technically a very healthy stock, and maybe get this one on a low volume pullback. It's possible that Boeing could pay a visit to the swing point there of 77.54. I'd be careful about chasing it up here. Another blue chip name attracting buying interest. Well, at one point it was, but Colgate-Palmolive has reversed off its high. It is now up only 14 cents to $115.49. Colgate, another nice breakout here over 111.37. That was its intraday high set back in late January, early February. Another stock that's probably a little bit extended up here. It has reversed after early strength. Story here, 2-for-1 stock split. They also raised their dividend by 10% to 68 cents a share. Remember, we talked about how TripAdvisor's breakout yesterday kind of fizzled out. The stock finished near its low. Well, it's back up 5% today to 51.05. So this is daily chart looks a little bit squirrely, but when you look at the weekly chart, let's pull up a weekly for TripAdvisor, and we'll see Actually, a much better look here. In fact, it's a pretty nice looking technical breakout on a weekly chart. The swing point was 49.35. It's at 51.05 right now. So I can do some quick math here, and we'll see. Doesn't look to me like it is extended in price, but if we take 51.05 minus 41, 35, it's about 3.4% above that swing point. So it doesn't look to me like the train has left the station here. When you're buying a technical breakout like this, you don't want to chase more than 5% over the buy point. So at 3.4% doesn't seem like you'd be chasing here. So weekly chart of TripAdvisor looks pretty tasty here. Nice technical breakout this week in heavy volume. And how about shares of Green Mountain Coffee Roasters? Take a look at a daily chart here. We'll see that the stock recently broke out over 49.35. Problem here, this is about as a low volume breakout as you can get. Buyers have been coming into the stock, but volume has been below average pretty much since February 19th when it started rallying. Pretty much right in this area. All of the gains have been in very, very light volume. So not sure this is a move you can trust. Fundamentals, sales growth decelerated quite a bit in their latest reported quarter. This was a stock that was definitely left for dead not that long ago, and to its credit, it has rallied back nicely. Technicals don't look too bad here, but just need to see some volume here. No real signs that the stock is under meaningful accumulation, which makes the breakout a little suspicious in my view. Economic data earlier today, we had weekly jobless claims down 7,000 to 340,000. That was better than expected. Economists were expecting a small rise to 350,000. Prior week claims revised higher to 347,000 from 344,000. 4-week moving average now at 348,750, lowest since March 2008. Of course, next catalyst for the market, up or down, will be the jobs report tomorrow. February non-farm payrolls expected to be up 165,000 from 157,000 in January. The ADP employment change yesterday came in much better than expected. Remember, we talked about that yesterday. Private payrolls up 198,000. That was much better than the estimate for 150,000. April gold today settles at $1,575.10 an ounce, up 20 cents. April crude oil, $91.56 a barrel. That is the final print, up $1.13, 1.3% gain on the day. Take a look at, I'll tell you what, I will pull up a chart of Alon USA Energy, ALJ, oil refiner, sitting just above its 50-day moving average. We'll talk about two earnings reports in the refining space when we come back. Alon USA Energy and also Delek U.S. Holdings. We'll do that when we come back, folks. Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Before we went to the last break, I mentioned that crude oil today settled at $91.56 a barrel, up $1.13 or 1.3%. Crude oil prices have generally been under pressure since about mid-February or so. A couple of refiners came out with earnings. This was Wednesday after the close. First of all, Alon USA Energy. You can see under some pressure today, down 4% to $18.99, making a stand at its 50-day moving average here, which is at $18.71. So it still holding slightly above that key support level. They beat estimates by a penny, earned 58 cents a share in the quarter that reversed a year ago loss. Sales came in better than expected at $1.95 billion, up 4% from a year ago. Last big breakout for Alon USA was in December when it broke out over $15 a share. Here was the big breakout, and then just a few days later, another huge move here. So looks like it traded a base. We'll see if it can hold above that 50-day moving average. Moving on, taking a look at Delek U.S. Holdings, ticker DK. Also under some pressure, but not nearly as much, only down about 0.8%, 31 cents to 38.70. They also reversed a year ago loss with profit of $1.09 a share. That was better than the estimate for $1. Sales up 9% to $2.18 billion, nicely above expectations. Same thing with Delek. You had a breakout here over 27 and a half. That was back in early January, and the stock really hasn't looked back. So it's a little bit extended up here, and we'll see. Might be ready to consolidate gains here. Refiners certainly have been a big pocket of strength in the market. Also want to take a look at Dril-Quip. This is a name that we have mentioned off and on. It is they make equipment, offshore drilling and production equipment specifically. They specialize in deep water, kind of harsh environments. The stock got an upgrade today, fairly significant upgrade by Bank of America Merrill Lynch, upgraded to buy from underperform. So it was a couple notch upgrade. Sales growth has been decelerating in recent quarters. I normally don't like to see decelerating sales growth, but growth prospects this year and next look pretty good. Full year profit in 2013 expected to be up 24% when compared to 2012, and up another 26% in 2014. So the stock right now up 2.8% to 83.26. We look at a weekly chart for Dril-Quip, and we see pretty compelling bounce off the 10-week moving average. And mentioned over the past couple days, a lot of stocks in this position right now finding support at the 10-week moving average after a breakout. The last breakout for Dril-Quip was in late December, early January. Here was the big move right here, moving up and firming up at the 10-week moving average. So like the look of Dril-Quip here, and like I said, we added an oil and gas producer today. So some interesting charts in the oil and gas sector. We took advantage of one today, not an equipment maker, but an oil and gas producer. Checking in on bond yields, higher again. Looks like 4 straight days of gains for bond yields. Yield on the 10-year note up to 1.99%, trying to get back above that 2% level. 30-year bond also higher to 3.2%. Some of the earnings winners today. Let's take a look at shares of Kroger. You know, Kroger's not a stock that I really follow. Supermarket stocks in general, you know, not on my radar, but Kroger, really have to give this company credit because earnings and sales growth has actually been accelerating in recent quarters, and the company reported its second straight quarter of accelerating year-over-year growth. Earnings were up 76% to 88 cents a share. That was 18 cents above the consensus estimate of 70 cents, so nice beat on the bottom line. Sales, impressive, up 13% to $24.15 billion. The estimate was for $24 billion, so a beat there as well. Kroger, of course, they operate the Kroger supermarket chains out on the West Coast here where I am. They own Ralph's, and then other supermarket chains under their umbrella are Smith's and Food for Less. So Kroger, very extended up here. You don't want to chase it. You can see the last breakout over 27. Right in this area here, so it's a stock that you don't want to chase, but doing very well today, up 3.3% to 30.33. Very nice numbers. Finally, we'll head into the second break here. We'll check in on Solar City. Numbers here were not very good. It is holding above its 50-day moving average, down 14% on the day to 1658. Big revenue miss. We'll talk about Solar City recent IPO when we come back. Thanks very much for tuning in. As always, Ken Shreve with you on Breakout Investing on TFNN. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back to Breakout Investing on TFNN. Checking in on shares of Solar City, getting hit pretty hard today, down 14% to $16.58. It was not a great-looking earnings report. This company had a very successful IPO in December at $8 a share. Even being down 14% is still trading double what it came public at. So still a growth story going on here, but they're not making money, and their sales growth was far below expectations. They lost 38 cents a share. The estimate was for a loss of 44 cents. Sales up 22% to $25.3 million. The estimate was for 36.7. So that is a significant sales miss. The company sells, and they also lease solar energy systems to commercial and residential customers. Another earnings report that investors are not taking kindly to, PetSmart. PetSmart, not a picture of technical health, headed into earnings, and the stock gapped down today, down 6.6% to $62.18. Good earnings growth, up 36% to $1.24 a share, better than expectations. Sales up 15% to $1.88 billion. Estimate was for 1.89, so mostly in line there, but their full-year forecast was below expectations. They're looking to make between $3.76 and $3.92 a share. The current estimate is at $3.97. They also guided full-year revenue. They said it would be up about between 2 to 4%, and right now analysts are looking for 4% revenue growth for its current fiscal year. So they guided at the low end there as well. Stock paying a price as a result. Also, very nice numbers from NationStar Mortgage Holdings. Good lesson here of why you don't want to, buy before the breakout. Here, NationStar was up 7 straight days ahead of earnings, looking like it was getting ready to, to break out. But stock is under quite a bit of pressure today. A lot of people, not sure why. The numbers were very, very solid, but the stock is down 5.3% today to 38.89. They made 71 cents a share, up 328% from a year ago, 4 cents above views. Sales up 180% to $332.6 million. That was also nicely above expectations. NationStar went public in March, a year ago, March 2012, at $14 a share, so it is still comfortably above its offering price. Ocwen Financial, OCN, we heard from them. This stock has been in rally mode. It is under a little bit of pressure today, down 1.5% to 40.77, and we should hear from Walter Investment Management sometime next week. Don't have an earnings date yet, but you can see a reversal for the stock yesterday. It is rallying back today, but only up 14 cents to 47.59. Again, earnings next week due from Walter Investment Management. After the close today, another strong performer here, recent IPO Workday. They came public in October at 28, and stock is under some pressure today ahead of earnings, down 4.3% to 61.73. Workday is one of these cloud computing firms. They specialize in human capital management software, payroll, things like that. The company was co-founded by PeopleSoft founder David Duffield, and Oracle bought PeopleSoft in 2004 for just over $10 billion. So Workday is expected to lose 20 cents a share, but good top-line growth going on at this company. Sales should be up 81% to $78.2 million. So Workday, I would stop short of calling it a high-profile earnings report after the close, but an interesting company that is well-positioned for growth. Let's call it that way. So we'll see what Workday has to say after the close today. We also heard from the retail sector today. A lot of same-store sales, and numbers not all that great, according to the International Council of Shopping Centers. 15 retailers reported average same-store sales growth of 1.7% in February. That was well below the 4.5% growth seen in January. Several retailers aren't even reporting same-store sales anymore. That includes Target, Macy's, Nordstrom, Kohl's, but we did hear from several companies today. Let's check in on shares of Limited Brands. LTD stock is down 14 cents today to 44.91. It's been under a lot of selling pressure. Significant resistance at its 50-day moving average in recent days. They actually beat expectations. Same-store sales up 3% versus expectations of 2.6%. And then home furnishings retailer Pier 1 Imports. Gap's down today, touches its 50-day moving average, holding above that support level for now. This is its second visit to the 50-day moving average over the past couple of weeks. Stock's down 4.9% to 22.11. They report earnings April 11th, and they sort of pre-announced earnings, I guess you can say, today, but they actually lowered their earnings guidance slightly. They now expect profit of 59 to 60 cents a share. The estimate is for 61 cents. They did say sales would be around $552 million. That's a little bit above expectations, but sellers in the stock today. So Costco, another company we heard from today, same-store sales solid here, up 6% overall. Better than expectations of a 5.1% gain, but you can see a lot of selling in the retail sector today. Stock is down 51 cents, 0.5% to 102.05. And Ross Stores, ROST, Kind of interesting to see Ross, the numbers from Ross Stores and TJX, discount retailers, very similar companies in terms of what they sell and price points and all that. Ross Stores getting hit hard today, down 7.5% to 55.20. Big sellers in the stock today. They missed same-store sales expectations. Same-store sales down 1% versus estimates for a 1.1% gain. Earnings due March 21st from Ross Stores. TJX, so let's check in on TJX because they were actually better than expected, but that has not kept sellers away from this stock either, down 0.6% to 44.66. The sales there up 1%, a little better than expectations for a 0.4% gain. So that is what's going on in the retail space. FleetCor FLT finally facing some selling pressure. This stock has just done nothing but go up. An incredible move by FleetCor. It is gapping down today, down 3.1% to $70 a share. News of a secondary offering of 4.5 million shares weighing on FleetCor. Check in on shares of CVLT. We mentioned this one yesterday, Commvault Systems. Still looking pretty good here, holding near highs. Very muted selling pressure in the stock today, down 54 cents to 76.41. Good support at the 50-day moving average. Again, we're found support there back in January, earlier this year. Big breakout for Commvault on October 31st. You see the big gap up for the stock here. That's when it... just a good solid breakout there. So working on a new base now, new swing point of 79.53. So if this market rally continues, this one, is a well-supported stock, fairly muted selling pressure, and showing good supporting action at its 50-day moving average. So definitely one to watch here. Wanted to also take a look at Cognizant. We mentioned this one yesterday. Cognizant trading up near its session high, hits an intraday low today of 80.03, only down 9 cents today to 80.61. Nice bounce off the 50-day moving average. So Cognizant, another stock acting very well here. And another name we touched on yesterday, we'll revisit it today. Click Technologies, nice. Gap up for the stock on February 15th, holding gains tightly here. Very strong stock. This is another enterprise software firm. They provide business intelligence software. Big growth prospects here. 2013 earnings should be up 54% from 2012. Out into 2014, annual earnings should be up 40% to when compared to 2013. So a lot of stocks still out there acting just fine. We are in an uptrend. It is okay to look for stocks to buy out there, but you do want to be careful not to chase. That's an important thing to keep in mind. Names like Google, yes, they are big market leaders. They're just acting very well here, but Google extremely extended. If you want to say overbought, you could say that too. But either way, it's just a stock that you shouldn't buy after such a massive price move. Netflix. Another stock that's acting very well here, has been under some selling pressure. Now this is a base building stock. It looks like after the gap up here earlier this year, it has started to move sideways. Not doing anything wrong, but just be better to wait for a base to form here before entering the stock. If you enter a stock, if you buy a stock before a base or consolidation phase, before the base completes, you're just opening yourself up to added risk. Here's another name, Abaxis. It is on the speculative side. This is a company has a market cap of 945 million, so it's a small company, but I do like the way this is trading. It's also thinly traded, average daily volume of 143,000 shares. They make portable blood analysis systems, so kind of a niche market, but stock is up 20 cents today to 43.26, and we'll just take a look at a weekly chart for Abaxis, and you'll see the big breakout here, and then coming down to its 10-week moving average. So for a speculative buy in a market that's in an uptrend, not a bad entry point here, firming up at its 10-week moving average, trading tightly. Like the look of Abaxis here quite a bit. And how about Starbucks? Starbucks under a lot of pressure. The ship has totally righted itself here. Clears a swing point of 57.27. We'll see what volume looks like tomorrow. Hopefully we'll see weekly volume come in from the prior week, but this looks like a nice base breakout on the weekly chart here. Not seeing a whole lot of signs of accumulation during its recent run, but again, we see weekly volume coming right now pretty close to the weekly volume it saw last week. So if you get a weekly volume bar that comes in higher than the prior week, you have a nice little breakout here on the weekly chart. So that is pretty much what's going on in the world of stocks. Let's check in on the markets here as we head into the close. We've got a little more than 10 minutes left to go. We've got the Dow holding on to a 33-point gain, 14,329. NASDAQ Composite up about 11 points, 3233. And the S&P 500 up a little more than 3 points to 1545. We haven't been overly aggressive with the Ultimate Growth Stocks model portfolio. We've put a few new buy recommendations out there in recent days. I think the model portfolio right now holds about 5 or 6 stocks at this point, but just not aggressively invested at this point. But since we got the buy signal from the market 2 days ago from the Nasdaq, that was the sign to start wading back into the market. We had been kind of moving to the sidelines, letting some long positions work for as long as possible. It didn't completely go to cash, but definitely we're in defensive mode headed into this week. But we got that buy signal on Tuesday, which was our cue to start putting some money to work. So we've opened 3 new positions, and you know what? They're all I think they're all profitable at this point. So that's a good sign that the underlying market strength looks okay here. But from here, we're going to keep an eye out on, continue to watch price and volume in the major averages. Keep an eye out for higher volume declines. If we start to see signs of distribution in the major averages, that is worth paying attention to. We don't know how long this uptrend is going to last, but I mentioned also the S&P 500 yesterday had some stalling action where it volume was heavy and it couldn't make much progress. Actually closed in the lower half of its range. So volume today in the market, not all that impressive. At last check, Nasdaq volume was tracking about 5% lower than Wednesday. Volume on the New York Stock Exchange tracking about 2 to 3% lower than Wednesday. Don't forget 30 days free of Ultimate Growth Stocks. Now is the time to be, kind of nibbling, seeing what's out there, what is worth buying. 30 days free. You can do that right on the homepage of TFNN.com. Just click on the newsletters tab, then investment newsletters. We'll come back, put the finishing touches on today's show. We'll do that in about 3 to 4 minutes. Stick with me, folks. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
The home builders have really come back to life. You can see the chart of the ITB here. Some stiff selling in this ETF, basically between February 15th and February 25th, when it hit an intraday low of 21.34. ITB has rallied all the way back to 23.57, and it's only about 30 cents off of a high here. So home builders continuing to flex their muscle in the market. Let's check in on shares of D.R. Horton. Nice support at the 50-day moving average. So far, the stock is up 10 cents today to 23.81. Other home builders out there, we'll check in on Pulte Group, PHM. See, this stock recently gave up its 50-day moving average, but it has rallied back above the line, and what you have here is a possible double bottom pattern forming for Pulte Group. So you've got resistance level of 2060 that the stock is going to need to get over here. But what you have is this first leg down. See, the stock hit a low of about 19, and then it rallied back, and then it made a second leg down that undercut the first leg. So that 19 level got undercut. PHM went all the way down to 18. Now it's back to 2017. So you keep an eye, see if it can get over that 2060 level. A lot of people still saying just after a big move since July. I mean, the home builders have been working for quite some time. They could have more left. And we are long one home builder in the Ultimate Growth Stocks model portfolio. So home builders continue to look good here. Let's check on the biotechs. They've also been working very well. IBB, that's sort of the proxy. Look at that. 1, 2, 3, 4, 5, 6, 8 straight gains for the IBB. It's up another penny today to 154.49. Another example of an ETF that I would not be chasing up here, but you've got plenty of biotechs working out there. Celgene acting very well after its recent breakout, looking a little bit extended up here, and Biogen IDEC, BIIB, still waiting on approval or word from the FDA about whether BG12, that oral MS treatment, the pill, if that's going to be approved by the FDA, we should be hearing in March sometime soon. Very positive trial data for BG12, so I think a big reason why the stock has made a move from 145 up to 171 probably is in anticipation of approval of this drug. Hard to imagine it not being approved with the clinical data as strong as it's been. So Biogen under a little bit of pressure today. Looks like its 7-session winning streak is in jeopardy. It's down 92 cents to 171.53. Let's see. Coming up after the close here, let's check in on Pandora. Pandora Media, ticker P on the New York Stock Exchange. Look for a loss of 5 cents a share. Pandora down 5 out of the past 6 trading sessions, still holding above its 50-day moving average, so technically not broken by any means, but definitely under a little selling pressure ahead of earnings. You've seen multiple quarters of strong top-line growth at Pandora Media. Sales this time around expected to be up 51% to 122.8 million. So Pandora, you'll remember, I think it was just this week they announced that they're going to cap the amount of free music that you can listen to each month. So I'm not sure that investors were thrilled to hear that, but we'll see what Pandora has to say after the close. And then Thor Industries, THO. This is a company that makes these RVs, growing nicely. Should see another quarter of strong bottom line and top line growth, but you can see the stock has been trading below its 50-day moving average for quite some time. So looks like it could be a resistance level for now. Coming up next, the Tom O'Brien Show. See you back here tomorrow, folks. 3 o'clock Eastern. We'll wrap up the week with another edition of Breakout Investing. Have a great day.